That's not what we're here to talk about. We're here to talk about price. Price pays. Everything else is conversation. Hey everybody, in today's video what we're going to do is go over 10 stocks to short for the upcoming week into the Fed week. And I think it's pretty important that we focus solely on that we are focusing on shorts. So there are a couple longs in here, but they are bear ETFs. Some have done quite well and we're going to go through those. I really want you to understand that the crux of this is profiting off the devastation that we just went through. I just want to go through this very quickly and then we'll jump right into Tesla, which is going to be our first one. It's really important to understand what happened today. Here's the 200-day. This is the last time we closed below the 200-day. There was something called the pandemic when that happened, and you can see what happened since then. This is not the end. This is the beginning, and people need to start thinking like that. This is what we were hoping wasn't going to happen. We were hoping that the Qs were going to bounce, and they didn't. So, and you can see the Qs did not bounce, it got worse. There are issues outstanding that are doing this. We can talk about some of them as we go through this, but what's important is technically price pays. That's it. Everything else is just conversation. The why on why something happens doesn't matter. So let's just jump into it. Tesla. Now this is one that we have been shorting for some time. If you follow the top 5 and 5, you crossed and you tried to get up over this, and I'm going to zoom in and you can see this level right here. And you can see how we're unable to stay above that. And now we had a decision to make. Essentially, this is a bear flag. It's kind of a wonky one. This wick was what was holding the glue. This was our glue. And that was shattered. There is nothing that is going to stop this from getting to 891. Now, I don't know that it's going to hold 891. I don't even know if we're going to hold that. But I know that the first stop is probably this 891 level. And then what we're looking for from there is to make a decision. So our first short pivot on this is going to be 939. That's going to be your short pivot on this. And I just want to hammer this point home. This is a once in 5 or 10 year situation. And you need to look at how you're going to take advantage of what's going on. Whether that's being in cash and sitting on the sidelines and then waiting, or shorting stocks. But this is not a common occurrence, what we're going through right now. Historically, if you go back and take a look at the SPY, you will not see us break that many times. We'll come and test it and then bounce, but it's very rare that you're going to fall down through this level. And on top of that, by important, I mean, you want to understand why you're doing this, because there are trend lines right here, channel line, and you can see those. Once you break out of those channel lines, and you can actually clone these. Always clone them so you get the same trajectory. It tells you pretty much exactly where you're supposed to be. And you see how you broke here? This is that frozen rope pattern we always talk about, where it just looks like a frozen rope straight down. These are deadly, and they are vicious. Now you can see some over here previously and how they work. And obviously this was the pandemic. This is not the end. This is the beginning. I'm not saying we can't bounce, but until we get back over that 200-day, you need to be looking at either being out of the market, short-term trading, scalping essentially, or you need to be shorting stocks against your portfolio. Anything else is not just simply not going to work right now. TECS is one way that you can actually play the market collapsing, but at the same time, you're buying it instead of selling it. So this is a 3X ETF. And we've talked about this a couple times in those daily top 5 and 5 videos. This was the level that we wanted to clear. We wanted to clear through that. We pushed higher. When these get going, they can really get going. Now, if you throw in the indicators with it, look at the volume, okay? The volume is telling you that you're just beginning. Now, that's pretty substantial volume. It's greater than anything. Hold on one. You are above on the volume, all of that. There's very little chance, in my opinion, that we're not heading to retest this 200-day. I just don't see anything in here that's going to stop us. So again, very simple trade. All we're looking for is an up and over. You're looking for 39, let's call it 39.30. Get over 39.30 and I would expect us to push up into this level and to try to get to 45. And that can happen fairly quickly because it's a 3X ETF. Now you want to sell these into strength, and you might want to remember that because these are bears. So, and the 3X ETF bears always end in tears. Remember that. Here, everybody was high-fiving one another, right? Everybody's feeling rosy, feeling really good about themselves. Okay, it never saw that again. Same thing here. So you have to take what you can get and then get out of it. Another way to play this carnage is SPXL. This is a 3X S&P ETF. All you're going to be looking for are areas to short this. Now, one area that you can short this is just the lower low. Hopefully you get a bounce up to the 200-day and then are able to get more of this off. But once this gets back to that 200-day, 116 and a half, 117, let's call it, that's really where you want to look at it. But off the open, we might not have that opportunity on Monday, so we need to be prepared. What you would just simply do on this bar is you would just look for that low, takes that low out, and it's risk on, trades on. It's that simple. Something like this can really fall apart fairly quickly. And to kind of put it in perspective, take a look at what's going on here with TQQ and when this broke. So you're seeing the same patterns repeat themselves. That's why it's so important and why I'm always pushing pattern recognition, because it really drives home the point of what's going on out there. Once you understand patterns, this gets a lot easier. Again, this is beginning, it's not ending. Could we bounce into the Fed meeting? Sure. I think if anything at this point, until we start seeing real buyers step up, we could see a bounce. We have the put call ratio at one of the highest readings it's ever been at. It's important to understand that. It's important to look for those indicators, but those indicators don't mean that they always pick the exact bottom. It could go on for some time and then it could start rotating right back down again. And that's something that we need to focus on. But I do like this, and it's very possible that you come back down to this level, this 104, 105 fairly quickly. Now, this is one that we talked about yesterday as well as a short, and the short went off, and hopefully you're still in it. If you follow me on a daily basis there on those top 5x5 videos, you're going to want to subscribe to this channel, because I am putting out private content to those that are subscribed. Subscribe, all notifications, and like the video. There's an algorithm that triggers when that's done that releases private content. Today's private content, by example, was the SPY trade. And what I did was I showed in the private content how this line was your line in the sand, and then the minute that broke, you wanted to be out, and we talked about why it broke. It's a 1-minute video, essentially why it broke and then how they were playing games. And if you saw that, you would have done quite well with that trade today. So I'd recommend that you consider subscribing to the channel. Back to Affirm. What are we looking at here with Affirm? Well, very simply, we've broken. The news that came out of Peloton with their preliminary earnings did not shine great light for Affirm. And what this is showing us is that we're breaking. We didn't rally like Peloton did today. It's showing weakness. So based upon that, this is going lower. What level of lower? Well, that's what we're going to have to figure out. So you really are looking at this 53.60 level as your next support. I still like this trade, and I still think you're going to break that level. I think this concept's going to be in a lot of trouble. So we're looking at 20% of their growth or 20% of their revenues coming from Peloton. So all we're looking for, again, are follow-through trades, but you're looking for 57.36. And I want to point something out about these ideas so far. You'll notice one thing. They all closed at the lows. Okay, we didn't see any major bounce today. There was nothing there. Nobody stepped up at 350 to jump in, right? We're not really talking about the geopolitical effects of Russia and the Ukraine and how that could affect the market. Okay, we're not talking about the deflationary bubble that's going on right now that's being popped. There's a lot of reasons why this is happening. And as this happens, as I say in the trading room all the time, this can always get worse. And I've been through this. I've been through this a couple times. I don't know that we're going to go through an 01 type of situation or an 08. But I do think you could see something with a very powerful move to the downside that people don't expect. So I think it's better to err on the side of caution right now. You know, your goal here is to make money and stay out of the way so that you have more capital to deploy when you go forward. In the meantime, we take our short-term trades, we make money, and we just sit back and we wait for better opportunities. That's what I do. Some traders don't trade. They'll sit out of the market till it gets better. That's not how I trade. If I see that there's the ability to make money, I want to learn that system and that process. And that's what I've been doing. Or what I've done rather. Anyway, see this level right here? This is what you want to focus on. 57.36, break that. Then we're going to watch down here and watch how we do it. 53.61. This gets us up and in and a party to it. People would suggest maybe you wait for a bounce. I'm going to suggest that if you're waiting for bounces, you might not see them. Look at SC. If you're waiting for a bounce, you didn't see it. If you were waiting for a bounce in SHOP, you didn't see it. I can't stress this enough that this might just be getting started. And that's something that people need to seriously consider. Next on the list is MicroStrategies. And yes, it's down, but it's just beginning. And I just want to point something out. Okay, we're at 365 now. We're already down another 10 points after hours. This is highly levered to Bitcoin. Why and how is it levered to Bitcoin? It's levered to Bitcoin because it's put its cash and cash equivalents into Bitcoin. On top of that, it's borrowed money, it issued bonds and borrowed money against its stock. Okay, so convertible bonds so that they could go out and buy more Bitcoin. Okay, so people that own the bond, okay, are either one, they're going to short this stock or be short this stock, or somehow through futures or something, some other synthetic, they are short Bitcoin. Okay, and they just book the spread. I can do a whole video on convertibles, but I don't want to get all into it right now. But what matters about this is you see these spikes? That's them probably hedging. Okay, they're hedging because they're seeing what's going on with Bitcoin. And I think it's important that you understand what's going on with Bitcoin here, and we're going to take a moment so you get this. See this line right here? That's what you need to focus on. Now, if you focus on Bitcoin right here in this line that I have down here, on July 31st, 2020, Paul Tudor Jones came out and said he did an enormous amount of research and he's come to the conclusion that Bitcoin is an inflationary hedge. Based on that day, institutions move. When he speaks, people listen. People put money to work. They were quite happy with the returns that they saw, right? We traded up fairly decently, bounced around a little bit. And then over the next 8 months, we had a 567% return to the peak and then the capitulation. Now, what's happening, perfect. Here we are with anchored VWAP on the date that he made his announcement about institutions. Like, now make no bones about it. He invested this day in Bitcoin, right? He invested before he comes out and speaks. They all do it. The issue that you need to be paying attention to is this is where all the people that bought based upon what he said, this is how it's acted. So I think it's really important. See, like you can put an anchored VWAP anywhere, right? You can VWAP all over yourself. When you can find specific periods and times that are important, that mark a certain occasion, you can see where those players are and what they're doing. And they respected it all in here, all through 2021. Why? Inflationary hedge. This move tells you that they are getting out of the inflationary hedge. So I understand that a lot of people own Bitcoin for different reasons, and that's great. That's not what we're here to talk about. We're here to talk about price. Price pays. Everything else is conversation. If we're breaking here and this inflationary bubble is popping, then you're going to go through a boom-bust cycle. Currently, boom-bust cycles in crypto are around 80%, just like they are for leading stocks. If you look at a leading stock, you'll see the same thing. I'll give you a quick example of one. Here's Roku. Here's where 80% would be on Roku. If you looked at UPST, okay, here's 80%. That's what I marked it off. I marked this about a week ago, and here we are, right? We're right around there. That's what happens with leading stocks. It's what happens with certain commodities, and it's certainly something that has been happening with Bitcoin in the past. We've all been there before. We remember what happened in 2018. So it's very likely that this has the potential to go down to this 13,500 level. And I know a lot of people don't want to hear that, but I'd rather just tell you the truth, that that's very feasible for that to happen. MicroStrategy is levered through the bonds, and they are levered through their cash and cash equivalents. No company out there is as levered to Bitcoin as MicroStrategy is. Now, he is a sickly, brilliant man. And I'm not talking about the next 5 to 10 years from the stock. I'm talking about what's going to happen this week. So let's just understand that and where we could possibly get to so that we could get up and in this trade. All you're looking for is for this to break the 375 level. That's all I'm looking for. I'm actually looking for it to break the close. If it can break 375.68, I would strongly say that you should be looking at this on the short side. This is your very first minor support, 353. If you break through that, you have a lot of issues. I mean, you can head straight to here. Now, if you want to find other areas where there might be issues, then you have this peak up here, and you can just go right to the day that they made their announcement and put that in. And you can see these lines and how this one sits perfectly there and how we broke that one today. And then if I remove my line and we just look at this line, you can see how that may be a better target because that's where I put a support line and it also sits to hit with a fib level, right? 2 indications are better than 1. So it's possible that this drops 100 points. It's not unrealistic. It dropped 80 today. So I think it's worth the risk. Peloton was one that we talked about. I issued a statement where I walked through why I think it's worth a 0 and has the potential to be a 0. They did preliminary notes. We have all seen the CEO and we all saw the CEO's comments. We can go through a couple of the lines. Essentially, what he was saying about Well, we don't talk about layoffs. We're not going to lay people off. It's exactly what the letter says. We are going to lay people off. He just says it in a very nice way. When he says that we're not stopping, statement was, we're not dropping production. What he's actually doing is dropping production. But the way that he said it was, we're not dropping all production. So there's a lot of legal speak and words in there. And if you really look at it, talking about why the growth is going to slow, and we need to be looking at the future. Essentially, he's coming out saying we're never going to grow the same way. Now, what does this mean? I think the company's in trouble. There's a lot of talk today about they're going to be purchased. Anyone that wants an acquisition wants it as cheap as possible. If a company's falling apart, why are you jumping into it right now? Wait till it bottoms and then buy the business. It doesn't matter how much money you have. So the idea that Apple's going to step up and buy this, does it fit into their program? Sure, it does. I don't know if they're going to want to go through the regulatory concerns with it or not, but it does fit their model. Same thing that we were looking for yesterday. Get through 23.25, and this is your first stop, $18. If you look at when the preliminary results were released, you'll see a series of analysts that came out and said, well, we're going to keep it in outperform, but we're cutting the target price by 70%. I've seen this play before. I know exactly how this ends. LABD, again, top 5x5. I strongly recommend that you watch these. Every day I do them. They're 5 minutes long. You have 5 minutes. Your comments really help me. They help me create the comments of make sure you say the symbol. They help me because I don't know that you're driving listening to this unless you tell me that you're driving listening to this. So me using pronouns is not going to help. So please comment on how I can make these videos better. And I appreciate all the support. So this was the levels that we were talking about. So this is how we started off, right, on the week. And we talked about 36 and getting through 36 and how this was our next target. Well, we're through the next target. The next target is now 58. Very simply, LABD is a 3x ETF, Biotech. So you're essentially, by going long this, you are shorting Biotech. All you're looking for is a higher high. That's it. You are looking for 46.02. It is risk on, and we're looking for this to trade up to the 58.05 level. I'm going to say the same thing I said about TECS. See how these peaks are? This ends in tears. Okay, so you have to sell and lock in the gain when it goes up. Maybe that means you have to look at multiple time frames and look at 15-minute charts. Doesn't mean you're going to get the high. You can always get back in, but you can't always sell at the right price. SI. So another one that is linked to cryptocurrency. Here were earnings. They tried to rally. They were unable to rally. Right to major support. And that's where you closed. This is an H. Now, what I would be most concerned about here, and I would learn these patterns, especially these candlestick patterns. They're really important. See this break here and gap? And then here, this is an island gap reversal. I did a candlestick video on this. And whether you watch my candlestick video or you watch somebody else's, learn these patterns. Because like island gap reversals, this is nasty stuff. And when this happens, you can see the break. Well, now I have another one here. When you have these multiple patterns, when multiple candlestick patterns, whether they're bullish or bearish, are combined, they actually go up in strength. They don't weaken. It's not weakening because you have two gaps here, right? Some people will say that. No, I have an island reversal. I tried to rally and I have another island reversal. That's not, if you're long, this is not what you want to see. If you're long, I ask you to really reevaluate your process here. What you're looking for is a very simple move, 93.48. You break 93.48 and you're going to break major support. Where could we go? I don't really see anything. Maybe you can get some relief and stay in here in the high 60, like really ugly, like we saw Shop get ugly today. This could just go. This could have a really long, red, nasty bar down. It's a very thin name, and these thin names they're crushing. So you could see 67, 50s on this fairly quickly. Roku was when they bounce, they bounce. When they don't bounce, there's not really much you can do. We were looking for the bounce. We kind of got up there, but we didn't get the full bounce. That's what we were looking for to possibly put this short on. We did the open and we went up. Another entry that you can use on a daily chart. If you open, go up and then go back through the open, there's a pretty good chance that the people that were buyers off the open are gone. That's exactly what this told you. If you used that as a trigger today, you could have made $9. Just might want to listen to that again. It's a really quick trigger and it's a really quick way to put a trade on, especially in a fast market like this. But now what are we dealing with? Well, I'm dealing with people telling me that they can't sell it now. They can't short now because it's too late. Leading stocks Okay, certain percentage of leading stocks will correct by 80%. This is your 80%. Okay. Netflix earnings were not great. I think they're going to Disney. I could be wrong. Maybe people are getting off subscriberships. That's something I really have to delve into, and I haven't done that work yet. But what I will tell you is this reversal today is not what you want to see if you're an owner. You're looking for a lower low and a continuation here. You're looking for 151.54. Okay, that's what you're looking for. You're going into a Fed meeting next week. Anything can change after that Fed meeting. So these are trades that you want to be thinking about. Okay, you rent when you short. You don't own. In and out, make what you can constantly be moving your stop down so that you protect your capital, because you can snap back quickly. I would just argue that if you snap back quickly, as you saw today, or as you saw on Friday, they were actually short opportunities. YNIO. Well, that's pretty obvious to me, but let me just show you this. See this neckline? That neckline is broken. And not only is that neckline broken, this broke today. So now by this breaking, that open, all these people here that bought, that pushed us up, they're all underwater and they are not supporting it. And you're right on that line. So this line that I just drew, this 27.83, this could actually be your stop. What you're looking for is you're looking just for a lower low. You're looking for 27.22. That's all you're looking for, 27.22. And what you're going to see, let me take a look at this. You don't have anything to $22, nothing. And you'll notice in today's video, what we didn't do is I didn't put a lot of bells and whistles in here. I didn't do a lot of RSI. I didn't do a lot of Bollinger Bands. When you start breaking down technically, they're going to look awful anyway. So they're not really adding value. You want to learn how to use indicators when they add value. That's when you want to use it. This added value when it broke here, right? You would know that this is where you want to short it when it broke the 50. You should watch this next video that gives you one trading strategy, where to get in shorts of your own short ideas, which is the goal. Trade to win.